The perfect dividend portfolio does exist and isn't as complicated as some investors might make it. Now, what I mean by this is that the perfect dividend portfolio is a portfolio that's made up of different dividend-paying stocks and or ETFs that match the strategy that you are specifically looking to achieve as a dividend investor. And what I've realized over time is that some dividend investors are not buying the right stocks or ETFs that match the strategy. Now, an example of this is that if an investor is more interested in growing their portfolio, seeking growth potential, then it probably won't make too much sense investing into some higher yielding options. And the opposite is also true. If an investor is seeking dividend income and focused on cash flow, then investing in more growth-oriented stocks or ETFs might not make sense. But in this video, we're going to go over two different dividend ETFs, one ETF that offers a lot more potential for income and one ETF that offers for not only dividends but also growth potential. And by combining both of these dividend-paying ETFs into a long-term portfolio, an investor would not only be showered with dividend income long-term, but also have the potential to grow their portfolio substantially. So if you would consider yourself a dividend investor that's also interested in growth potential long-term, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the combination of what I'm talking about for this video is combining the SPYI or the NEOS S&P 500 high income ETF, which in my opinion might be one of the best high quality cover call ETFs across the entire market at this time, at least for those investors that are seeking consistent dividend income on a monthly basis, but also wants exposure to growth. But by combining SPYI with the Schwab US Dividend Equity ETF, or SCHD, a dividend investor would not only have a ton of income coming in on a monthly basis, but also with SCHD, there's the potential for growth long-term, as well as significant dividend growth, at least historically. Now, before we move any further and I explain exactly my thought process, by combining both SPYI and SCHD, which I assure you I can put my money where my mouth is, right here are my daily SCHD purchases, and right here are my daily SPYI purchases. I think it's important that we dig a little bit deeper into SPYI and SCHD just for those investors that might not know exactly what these ETFs are and what they have to offer. So first, all right here on the NEOS website, it says looking for high monthly income. And I would say yes, who isn't? The NEOS S&P 500 high income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax efficient manner, and also on top of that have upside potential when the market turns bullish. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number three, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, That means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now looking into SCHD's fact sheet, just some of the highlights let's go over. It says a straightforward low-cost fund offering potential tax efficiency, which is great. The fund can serve as part of the core or complement in a diversified portfolio, makes sense. Tracks an index focused on quality and sustainability of dividends, which I said the underlying index is impressive, and it has a rigorous set of screenings for stocks to enter and exit, which is very important, especially if you're like myself and you want to sleep well at night. Now, some other main things about SCHD, it currently has 52 billion plus in total net assets, which is massive. The expense ratio is 0.06%, which is very cheap, and especially if you're like myself that now owns hundreds of shares of SCHD, you don't want an expense ratio that's too high. So now that we thoroughly understand SCHD and SPYI, the idea of combining SCHD and SPYI for a long-term dividend growth portfolio should make a lot more sense. And that's exactly why, like I shared with you a few minutes ago, on a daily basis now, I've been buying shares of SCHD every single day. Every single trading day, I buy at least one share, if not more, of SCHD. And every single trading day for a while now, I've been buying a ton of SPYI. And once again, just for some proof, here are some of my SPYI purchases on a daily basis. And here are some of my purchases of SCHD. Now, just because I'm purchasing SPYI and SCHD every single day, as of right now, and I'm going to be doing that for the foreseeable future, does not necessarily mean that that's the best investment option for you. You see, for me currently as a 31-year-old dividend growth investor with around 40 different holdings in my long-term dividend portfolio, as you can see right here on the screen, I have a good amount of different stocks and ETFs across different sectors, different areas within the market. And as of right now, my strategy is pretty simple when it comes to investing. I'm looking to purchase diversified ETFs for the most part, like SPYI, that offers income potential long-term, but without major decay along with it. But on top of that, I'm also looking to buy into diversified dividend growth ETFs like SCHD, also like ETFs along the lines of VOO, DGRO, DGRW, etc. Because I want dividend growth ETFs like those ones to be the foundation of my portfolio, to continue to hopefully pay me more and more in dividends over time, and to, of course, hopefully, potentially have the portfolio to grow and balloon up in price long term. Now, that's just my specific strategy like we talked about towards the beginning of the video. Some investors out there watching this might be much more interested in overall growth potential of their portfolio. Maybe investors want to buy into growth stocks for ETFs and let their portfolio grow until retirement. Or maybe on the other hand, some investors are interested in just income-focused ETFs, closed-end funds, or other asset vehicles that are going to pay them the maximum amount of income from day one. But like most things in life for me personally, I sort of sit right in the middle, a little bit more on the income side of anything, because cash flow covering my bills is a major concern and a major goal that I want to achieve long term. So now that we talked about the strategy of combining both SCHD and SPYI ETF for not only massive income potential, but also for the potential of the portfolio to grow long term along with dividend growth and other things, I want to lastly hear what you guys think down below my strategy of buying SPYI and SCHD every single day as of right now. And let me know your honest thoughts in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Also, make sure to go down below and grab this exact dividend tracker for you to track your dividend progress ongoingly. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.